All right, good evening, everyone. We have Netflix that I opened up a position today, literally 2-3 minutes before the market closed, and that's because it's sitting on the 21-day moving average, possibly mean revert back above the 6. You can see that it's in a gap filled unfilled area, and there's lots of gaps in between this larger gap that's formed from 250 all the way up to about 335, 33, 333. So in this daily bearish Wolfe wave, we did take puts this week on weeklies and profit on a 4.5% move. It did continue to move lower. However, once the price moves to a moving average, and your positions start to generate profit, you need to manage profits. Like, you just can't assume it's going to go down, and everything moves up and down in this market, right? You can see how all these wicks are formed in price. Generally, sometimes when you get this TTM squeeze where the Bollingers are contracting, then you get expansive moves, which are pretty breathtaking in terms of profits, but you can see it's not that easy to hold on to because you get a lot of red candles in between that as it keeps on moving higher. Okay, so right now with this bearish Wolfe wave, I think that Netflix is going to move a lot lower. However, there's a lot of other gaps in between that I'm going to trade into a bullish holiday. That's Thanksgiving. So tomorrow, I think Wednesday, we have Fed minutes that should kind of be just a repeat of whatever the Fed discussed in the last meeting, and that I'm assuming is going to push the markets higher. But what I'm looking for is a move up to the 6-day moving average, and possibly if we're lucky and the market is super bullish with the VIX selling off at that $20 gap, then we can even get a 302 gap fill, which is a 5% move in Netflix, and that's a pretty big move for a position in weeklies. Now, if I lower the time frame to the 4-hour time frame, you can kind of see that there's the gaps above and below are a lot more clearly defined, right? Because when you go into the daily, there's so many gaps from the historical events that happened this year that they're kind of non-relevant. The ones that are relevant are the ones that are the closest to where the price is trading. So that's the 305 and the 255. Okay, you can see that both those gaps are open. If I drop the time frame down to, say, the 78-minute, which is one of my favorite time frames, you can see that there's also a 70-minute TTM squeeze that is forming, right? And then if it does expand, then you've got 291 all the way up to 300, which is a psychological target. And if the market does push even higher with a trend that's less than 0.8, then I would say that the market could continue to rally throughout the whole entire day, taking out all these gaps up to 310. So 310 is a pretty big move. That would take that would be about an 8% move. I don't think an 8% move will happen in one day for Netflix. It might take about 2 to 3 days. If Netflix does make a big move with no news and is just moving with the market, then you would expect around 4 to 4.5%. If there's news and it has to be like important news, then 8%, 4%, 4.5% all the way up to 8% is definitely probable. Okay, so it's possible to make it up to 8.39, but it's not. The probability is low, especially when there's no news. If there's news, then the probability will spike up, and then now it becomes something that you want to have a couple of runners leave it left so that it could fill that. And we drop down the time frame all the way down to the 30-minute time frame. You can see that it actually triggered a bullish intraday Wolfe wave. So yeah, this morning the market I was in SPX calls. Tech kind of traded weak at the open, and kind of you can see the same pattern here playing out day after day. But this time it sold off, and I did not participate in the puts. Maybe I should have. And I think it made about a 2.2, 2.5, 2.77% move. That would have been about an 80 to 100% move on those weekly puts. I was not in them. I was in SPX calls. And then you get that reversal with a bullish entry, and then it seems like it hit the target. So does that mean that the move is over? Well, if we look at the volume did start to increase as price started to increase, and then the cumulative delta here, which is another way of representing the volume, is now looking like it's expanding at a exponential rate. So there's this moving average here at 294, and then the psychological target up to 300. That is something that I'm looking forward to into Wednesday's Thanksgiving bullish trading day. However, so I think what the path of least resistance, especially on a day like this, because it could have just taken this level of support here out, and then just sell off all the way down to 256. So that's not likely to happen tomorrow. Path of least resistance, especially when you use the 78-minute time frame, change the candlestick to Heikin-Ashi candle, you can see that the centroid of the candle is now bullish when you compare that with the previous candle. And then we got a 78-minute TTM squeeze now. What I'm expecting here is the volume to start increasing increasing at an increasing rate exponentially, and try to tag this moving average, which is the 50 moving average with respect to the 78-minute time frame. Okay, so that's pretty much what I'm in right now. I think once the move takes place, you want to leave a couple of runners up to 310. That would be a double top, right? And let me just draw that line in there. So you get a move up here, a quick move in the morning because of the volatility, and it chops, right? Maybe get chops back, or maybe trades sideways like this. I don't know. And then on Friday into Monday, you get another pop, and that would be a double top. Okay, so that would double top form, and that's where I would want to look to get some puts for the next leg down, because remember, there's a gap around 255-ish. I think it's right here. Let's just check on the 30-minute time frame. Yeah, so that's what I'm looking for. So when the gap fills, okay, so it doesn't look like it's going to go all the way up here, right? Because the gap ends right here. Once this gap fills at 306, okay, there's obviously another gap here, but I think that's going to, this gap probably needs to be resolved first. Once it gets here, I'll be looking for intraday bearish Wolfe waves to help support my decision of opening up puts. And then depending on the day of the week, this week I think the market ends up strong bullishly, but next week, maybe the last day of the month, that would be either the 29th or the 30th, we could see some weakness coming in, maybe a sell-off for the rebalancing into the new month of the year, which is the last month of the year. That's December. Okay, so thank you very much for your time, and have a great day.